Welcome to another episode of Lunch with the Shark. Join us as we dive deep into discussions about business, accounting, and finance to help you build a business that thrives. Now sit back and have a bite with your host, the Shark CFO, Vidal Espinosa.
Well, hello. Good afternoon to everyone, and welcome to a new edition of Lunch with the Shark. And I am your host, Vidal, the Shark CFO Espinosa. How's this Monday morning going for you? How's everything going for you? It's great to be back on this week. And it's really nice to be back at the office, relaxed, working a little bit, and planning for the new month that it's only 4 days away. And it's only just this week that we're going to be here. So how was your weekend? I'm going to tell you that my weekend, I'm going to be make you jealous. We actually had two family events, one in Fontana and another one in Tijuana. And actually, it was really fun. Captain Crunch, how are you? He actually just stole somebody's shoe because he loves shoes. I don't know why. But he had a very filled event weekend. We actually took him to Fontana and then we took him to Tijuana. He had birthday parties. He enjoyed it. Isn't that right, Captain Crunch? What are you doing? He's growling at me because he thinks I'm going to take away his prize. So I want to give a huge thanks to my dear friend Jose Luis. Jose Luis, thank you so much for that paella. Thank you so much for that bottle of wine. It was delicious. Like everybody enjoyed the paella. We all enjoy some little vino that you were so gentle and grateful, thankful that you sent it to us. I really appreciate that. My whole family thanks you, and it was really good. We love the paella. So anybody who wants paella, I'll share that information on my Facebook and on our Invictus Advisors Facebook and social media, because people, if you live in the region, San Diego, Tijuana, any vicinities, dude, you need to try it. It's delicious. It's probably one of the best paellas that we've ever had. And my mouth is watering. We had a little bit of extra, and we're actually having that for lunch. So thank you so much. So, so how was your weekend? I hope you can top my weekend because it was very full of family events, family affairs, and it was relaxing. We actually did nothing regarding work at all. Nothing, like zero. We only focused in our family. We only focused in ourselves. We just came back to the office and starting our work week. And so far, for the last 4 hours, I've been finalizing little pending issues that I've had. I think Captain Crunch is ready to go back to bed. He's actually really tired. Like you should have seen him last night. He was like completely out. So yeah, he's tired. He's had a very intense weekend. So this morning we've had an amazing phone call. We had great news our way. Another great news, a couple of new clients, and things are moving along. Things are going along. Things are moving on. Like, are you moving on? Is your business moving along? And are you properly structured in your business? What do I mean? What do you mean about properly structured? Yeah. Do you have the proper business entity? This week at Lunch with the Shark, we are going to touch the topic of business entities. What do I mean about business entities? what are business entities? I have the best and the right business entity for my business. You might not have the best business entity for your business because you probably got the business entity that your compadre, your neighbor, your business partner told you to get. I've come across certain meetings over the course of my business experience that, dude, that business entity is not for you. And it's very interesting because this morning I actually wrote an analysis for all our clients that receive the payroll protection program loan for their business. And the problem here is that, yes, a loan, it's non-taxable, right? Any monies that you receive from a loan, it's not considered income. Therefore, it's non-taxable. Any monies that are forgiven, the lender, the person who lends you the money, can send you a 1099 for the loan forgiveness, and that money becomes taxable. In this case, the program itself states that that money, it's not going to be taxable. But since you utilize that money for payroll, rent, utilities, those expenses up to the amount forgiven will not be considered a taxable deduction, therefore making that portion taxable. Because if you are at this point having that considered as an expense, well, you have to add them back up, making that a non-taxable expense. So therefore that makes it taxable, the sole factor. So I had to write not actually had to, I wrote an exercise on making sure that people understand what's taxable and non-taxable in this particular case. And having your company taxed a certain way will have a higher impact in your taxes or not. But that's a different topic. So let us explain the different business types of entities that would be better for you. Of all the choices you make when starting a business, one of the most important is the type of structure your company must be. And why is that? Because the type of entity you select or your advisors tell you to select will make a huge impact, first of all, in the growth of your business, and second, your tax implication, your tax impact, how you're going to be taxed. Okay? Not only will this decision have an impact on how much you're paying in taxes, it would affect the amount of paperwork your business is required to do, your personal liability you face, and your ability to raise money. Like, some people might be seeking investors. Others might be like bringing in family members. And how you're going to grow? Is it down the line? Are you planning on like a lot of things? So if you don't know this, if you don't know what you don't know, how are you going to make the right decision on which entity you're going to select? And LegalZoom does not ask you questions. They just sell you a package for what you have selected. And you select based on opinions that you hear around and what you read and you understand in Google. Let me give you an example. Let's say that you have chest pain, okay? But different sicknesses have chest pain, right? And you basically it's like going to MD Web and saying that, oh, sorry, give me 1 second, because Google thought that I was having actual chest pain. Hey Google, hey Google, thank you. Google heard that I had chest pain and they were calling an ambulance. So that this is not the case. So if you're having, just Google WebMD, and you're going to see that there's a lot of things that can cause pain. Okay. So it's the same thing with you. You can Google stuff and you can determine that you are good with a partnership, that you're good with being a sole proprietor, that you're good with being a corporation, or you're good with being an LLC. But a true expert, a true advisor will know which questions to ask. And based on those answers that you provide them, they can make the accurate determination for you, your company, and your projected growth. Right? So, in this case, we actually had someone come to us and we have them an LLC, a limited liability company. But an LLC for foreign individuals, it's a good vehicle to engage in their business in the United States. Nevertheless, it's not a good vehicle if they're taxed as a disregarded entity, meaning everything flows to the members. Okay, so when we create LLCs for foreign individuals, we immediately, like, it's an internal process, it's a given that we are going to tax them as a corporation. And we had this case where this individual came to us and they said, "Oh, I already have an LLC. I registered it at LegalZoom, and Wells Fargo gave me my EIN number. So the banker signed me up for my EIN number. So the only thing is that they're getting free advice here and there, and they're just piecing everything together. So this guy says to me, "Oh, you know what? And I want to become an S corporation." And I'm like, "Well, you can't taxed." Okay, listen, you taxed as, and they're like, "Oh, no. Google said that." Google said, okay. So now they're making Google speak. So Google said that we can be an S corporation because we have less than 100 members or shareholders. And that's that. And I said, well, you can't be an S corporation because, first of all, in order for you to be qualified to be an S corporation, every single member or shareholder must be a legal resident of the United States or a U.S. citizen. Oh, but I have a Social Security. I said, yeah, but you're a foreign individual with a Social Security. Okay, that's perfect, fine. You're allowed. There's no law or regulation that impedes you to have a Social Security. But that Social Security says that you can only use it if you're authorized by immigration to work. Now, you don't have an authorization to work even though it's your company. You don't have an authorization to receive a salary even though it's your company. Therefore, make you disqualified for an S corporation. So this is an example of when not good advice it's given, or when you understand what benefits you based on what you read, making you disqualified for an S corporation. This will in turn grow into a snowball, because let's say that you apply for being an S corporation, you do your business as an S corporation, you actually pay yourself salary through payroll when you are not entitled to receive salary and payroll. you're not legally authorized to work in the United States, you can actually work in your company. You can receive compensation as an independent contractor and pay taxes on that. But this will generate a humongous tax impact on you because you'll be taxed on your worldwide income. Like, it would create a humongous tax implication, and it will create a possible immigration issue, because if you're working in the United States without an authorization, this can actually preclude you from renewing your B1, B2 visa. So there's a lot of things that you need to consider. Okay, so that's a case, a real case, where we had to intervene and we had to fix it. Like, it was a lot of work. And at the end, this individual was like, holy crap. By me trying to save some hundreds of dollars, I end up paying thousands of dollars. So really trying to save hundreds of dollars turned into a big snowball, and we had to do a lot of work and cleanup, which is the most expensive, cleanup. And we had to do cleanup, and we cannot just like ignore it and create a new one, because ultimately this is going to go back under that social security number that it was there, and it's tied to you, and it's tied to your business, to your visa. And so therefore this had to be cleaned up so we can actually path the way to a proper business structure, to a proper visa renewal. So let us talk about the different types of business entities that you have options to create. So the types of business entities you have will depend on three primary factors. Three: liability, okay, which is from you to the outside, your liability, your personal liability; taxes, okay, taxes; and record keeping. Here's a quick look at the differences between the most common forms of business entities. So we have the four basic business entities, okay, which are sole proprietorship, partnership, corporation, and limited liability companies. These are the four most common business entities or business forms or business structures that you can actually work under, okay? And let me make a parenthesis here. There's no such thing as an S corporation entity. No. And if somebody says, oh, we are going to create you an S corporation, run. Run, Forrest, run as fast as you can from that advisor, because they have no clue what the fuck they're doing. If somebody calls an S corporation a legal entity that you can create, that's wrong. Sole proprietor, partnership, corporations, limited liability companies. Okay? Those are the four types of legal entities. Remember, we are not attorneys. We're talking about our experience. We need to look and seek legal advice when you're creating an entity. We have attorneys under Invictus Advisors that will guide us, consult for you as our client, to select which of these four entities is the best for you, and they will create the legal documents on your behalf. Okay? So, sole proprietor, partnership, corporation, LLCs, limited liability companies. Now, the last two, corporations and legal liability companies, can be taxed as a regular corporation or as an S corporation, but those are tax benefits that you must solicit. It was so funny because several years ago, like 7 or 8 years ago, there was this lady. She's a well-known public relations supposedly guru in Mexico, and she came to us we used to consult for her and sort of things. And she says, "Oh, Vidal, do you know what? I have a company in Nevada." Listen here, that my Mexican accountant told me to open, and I need to pay taxes. I said, "Yeah, but your business account, your business checking account, it's addressed in California, first of all. Second, you have issued invoices utilizing your California address. Okay. Thirdly, they've mailed you the payments to your California address. And fourth, under your agreements, you're utilizing a California address. Therefore, you have already selected or said to the state of California that you're doing business in California. You either must register your Nevada company in California or create a California company. Second, you are paying taxes as an individual. Okay? You're going to have to pay taxes for your worldwide income. So what I'm going to do is I'm going to register or request, seek the tax benefit of taxing you as a corporation, not as a disregarded entity. Immediately, like 1 hour after I email her, she calls me and says, "You know what? You're completely wrong. I spoke to my accountant in Mexico, and there's no such thing as doing that." I said, "Perfect. That's okay. But if you don't believe me, I should not be consulting for you. You should have your Mexican accountant deal with it, not me." So we part ways. A couple of months later, I came to find out that the Franchise Tax Board in California sent her a very nice letter saying, "Hey, you know what? You owe us like $100,000 in taxes." And she called us, and I said, "I can't consult for you. I can't consult for you because plain and simple, you just want opinions, and you tailored your own business suit under those opinions. Therefore, this is going to cost you close to $100,000 in taxes just to the state of California." Pay attention. Okay? Sole proprietorship. It's the most common form of business organization. The owner, it's the only person responsible and liable for all the financial obligations of the business. Sole proprietorship, it's you, the individual, you doing business under yourself. Okay? You are the only responsible for any liability, any debt, any taxes, anything that you do in business, you are personally responsible for. In this case, anything that you sign, any debt that you acquire, if you are in default, anybody can go after your personal assets. Anybody can go after you. Anybody can go and take whatever you own from you. There's no protection. You're doing business as yourself. That's it. Plain and simple. Okay? And I'm speaking about my experience, and I'm speaking about what I know. I'm not providing you legal advice. If you need a special consultation, set up a meeting with us. And if this is for an LLC, this is for a legal structure or an entity, we'll have an attorney sitting with us and we can consult. Okay? But if you're a sole proprietor, whatever you own, it's up for grabs. Period. Okay? A partnership, it involves two or more people who agree to share in the profits or losses of a business. A primary advantage is that the partnership does not bear the tax burden of profits or the benefit of losses that are passed through. A partnership, it's a pass-through, meaning that any losses or profits are transferred to each of the partners to report on their income tax return. A primary disadvantage is the liability of each partner. It's that they're personally liable for the financial obligations of the business. Let me give you an example. A partnership can or cannot be registered in the state where you are at. Okay? So therefore, there's no creation, there's no birth certificate that it's certified. Okay? You can actually file a birth certificate with the state, talking here in California, and that's it. But there's no birth certificate or legal birth certificate, same as in the sole proprietor. There was no birth certificate certifiable or provided by the state. Now, anything that you signed under the partnership, you are personally responsible in the percentage that you participate in that partnership, that association, that venture. Okay, so let's say that I have somebody else and myself open a accounting firm and we create a partnership. Well, my assets come into play if I owe money through the partnership, regardless whether I signed it or my partner did. I will become liable in the percentage that I am partner in this venture. So if 50-50 and he acquires a debt through the partnership, I'm 50% responsible and he's 50% responsible. If I don't pay, if he doesn't pay and we go in default, I will be responsible for 50% of that debt. Okay? They don't separate, 50%. If you pay the 50%, then you're all free of clear. It will go through a huge case, blah, 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 blah. So also, I share in the profits, 50%. So at the end of the year, whatever profits we have, I'll get a form, which are called K1s, and I have to report that income in my tax return, regardless of whether I receive the money or not. That's completely different, whether I receive the money or not. This is for tax purposes, not for administration or management purposes, okay? So let's say that our partnership profited $100,000, and I'm 50% partner. I get $50,000, and he gets $50,000 in paper through a K1. Now, in a partnership, I would have to report that on my personal tax return, okay, which is $50,000. Now, I have to pay taxes on that, regardless of whether the partnership wrote me a check for $50,000 or not, okay? And then I pay taxes on that. Partnerships are also taxable for Social Security and Medicare, which is self-employment tax, okay? 95% of those $50,000 would be taxable at 15.3% on top of my personal income tax, okay? And I actually can deduct or cut that 15.3% in half to adjust my income. Nevertheless, I still have to pay that. That's a lot of taxes that has to come out from my pocket, regardless of whether I receive those $50,000 or not. Okay? Now, if there's a loss, I can actually utilize that loss versus any additional income that I have. So it's very good to plan accordingly before you go into a partnership. Okay? Third, a corporation, it's a legal entity that is created to conduct business. The corporation is an entity separate from those who found it. Okay? In this case, the founders, the creators, whomever participates in a corporation, they are called shareholders. Okay? In a corporation, whomever is an investor, whomever participates, it's called a shareholder. Okay? The key benefits of a corporation status is the avoidance, listen, the avoidance of personal liability. The primary disadvantage is the cost to form a corporation and the extensive record keeping that is required. Yes, there's a lot of record keeping. There's a lot of formalities that any attorney can inform you. Okay. Nevertheless, you need to ponder cost benefit. Cost benefit. Okay. Now, the IRS grants you the benefit to be taxed as a S corporation or continue being taxed as a regular corporation. Okay. Now, these are the ways that corporations pay taxes. So we will cover this on tomorrow's Lunch with a Shark. So tomorrow we're going to talk about the way corporations are being taxed. S corporation, C corporation. Okay? But I cannot create for you an S corporation. We can create for you a corporation and request to the IRS the benefit of being taxed as an S corporation. Okay? It's a huge difference. Okay? So, why to create a corporation? When you create a corporation, you're actually, the first step is, what is a corporation going to be used for? Okay? Because as I said, there's a lot of requirements that you need to have after you create a corporation. INC, okay? Corporation, like minutes, reporting, taxes, and so forth, okay? It's you need a lot of things, but you must have them if you are going to create a huge company. Are you thinking of going public? Are you thinking of having investors? Are you thinking of requesting investment from other people that are going to have different participation or different benefits as shareholders? Okay, so we have to ask you all those questions to properly advise you on which entity you must select. And our main focus, it's not just the legal protection, okay, that the attorney takes care of it, but one of our main focuses is your tax implication and your management. Your tax implication and your management. Not everybody thinks about their tax implication. They just want to be created, they just want a company, a legal entity, because it's super cool to have an LLC, right? Why? Yes, it's super cool to have an LLC, but if you're a foreign individual, an LLC, it's the right vehicle, but you must be taxed as C Corp. Oh, but I'm going to be double taxed. Well, what's better, to be double taxed to a point through a corporate taxation, or do you want to be taxed on your worldwide income in the state and federally in the United States? What do you mean? What do you mean? Yes. So we'll cover that tomorrow. Now, a corporation gives you the protection of separating your personal liability versus the company liability. By creating a company, by creating a corporation, okay, consult your attorney, you are protected from your personal assets and from the assets the company has. Now, it's not immediate, and it's not just because you have a corporation, you get that protection. No, as Anna Georgia would say. No. You actually need to know how to operate a corporation. You need to know how to operate a LLC. You cannot commingle or utilize your company's business account for personal expenses. Hello, you can't. Oh, but it's my company. Yes, it's your company. But it's my business. It's my money. Yes, it's your money. But where's that separation of liabilities? You want to have a separation of liabilities when it comes to any debt or any possible wrongdoing or any any action, but you don't want that separation when it comes to your finances. That doesn't make sense. There's a little thing called the corporate bail that your attorney can actually give you better advice about this or explain it to you. I'm just going to give you an example. And I'm going to tell you what I know about the corporate bail. Corporate bail is the legal protection that corporations and LLCs provide you. Okay? It actually is the little shield that protects you personally from any legal action versus your personal assets. Let's say that you have a sole proprietorship, right? And you've grown so much, but because of the advice that you've read on Google and the advice that you're making $300,000-$400,000 a year, and you're comfortable being a sole proprietor, and you get into an accident. Your personal car on a weekend, not business related, nothing. And you get into an accident. And this person suffers damages, you are at fault, and they take you to court. And maybe in your personal account, you don't have enough money. You have $20,000, $30,000. You actually forgot to pay the insurance. And the day of the accident, there was a gap in your insurance. So your insurance company says, well, we're not going to cover it. And you only have $20,000. Well, guess what? The person that you hit, the person that you were involved in that accident, can actually go and seek the money from your business account. You're a sole proprietor. But if you had a corporation and you use it properly, not commingling your funds, you were only going to be liable for $20,000. Or they can only take away from you those $20,000. There's a segregation, a separation of liabilities. Now, in the same example with a corporation, but you commingled, you use your business credit card, your business debit card, your bank account for personal expenses, to go and shop and for clothing, and to go in on vacations, and to you utilize your business account for personal expenses. The court can actually find and say, hey, you do not want the legal protection of a corporation. That's a corporate bail. We're not providing legal advice, but that's what corporate bail is. The protection, the little shield. Like if you were on the Star Wars movie, the force field around the Millennial Falcon or whatever it is, that force field, that shield, that's the corporate bail for your company. That was a very nerdy way of explaining the corporate bail, but I think it came across. Now, we have the fourth and final legal entity that we're going to explain. It's the hybrid of a partnership, okay, which is the limited liability companies, commonly known as LLCs. They are super popular because it allows owners to take advantage of the benefits of both corporations and partnerships in creating a business. The advantage of this business form are that profits and losses can actually be passed through the owners without taxation of the business itself, while owners are shielded from personal liabilities. They're completely shielded. When making a decision about the type of business to form, there are several criteria you need to evaluate. The first one is legal liability. The second, and probably one of the most important ones, or if not, it's the most important in my point of view, it's a tax implication. The third one is cost of formation and ongoing administration. Let me tell you one thing. If you go to LegalZoom, the only thing they're going to do is they're going to register your birth certificate for that company. The name LegalZoom, it's a little bit misleading because they're not going to provide you your corporate documents tailored to you. Birth certificates, you can go and get your own birth certificate. You don't want to do it though, but you can actually go and get it yourself. That's not your LLC. That's not your corporation. It's like going and renting your office space and just writing I am renting this space for this amount from today till tomorrow, or from today till 1 year. Okay, and what are the rules of the game pertaining to you and to whomever you're renting that office? That's called a lease agreement. Okay, and they're tailored either with check marks or with names and addresses and things like that pertaining each situation. Don't go to Google and download a template. I dare you, do it. And just go and get into a legal action. And let's see how good that holds in the court of law. You're going to be like, holy shit, why didn't I invested $10,000, $5,000 with a good advisor, an attorney, to create my company? Now I am out of everything and I still owe money. Flexibility and future needs. LegalZoom does not ask you for your plans. LegalZoom does not ask you where do you want to be in 5, 10 years with your company. Keep in mind that the business structure you start out with may not meet your needs in years to come. Many sole proprietorships evolve into some other form of business like a partnership or corporation as company grows within months and the needs of the owners change. My recommendation is if you're planning on thinking of opening a business, start with the right foot. Create a legal entity to protect yourself. Create a business structure, an LLC or a corporation. Don't open or continue as a sole proprietor because it's going to cost you a shitload of money. Trust me. Last week we finalized somebody's structure and we did a comparison. Sole proprietor versus an LLC taxed as an S corporation. We saved them close to $100,000 in taxes based on their projection. Just by doing a little calculation, an analysis and comparison. And their income was not more than $250,000 a year in profits from that company. So if somebody's advising you to, wait until you pass the threshold of $250,000, also run for it, run, because they probably have not done calculations. They probably just giving you advice the same way that they're reading Google and listening to all the noise out there. It's not right. Let's have a conversation about your business entity and how you can improve it. You can sign up at invictus-advisors.com/shark, and we'll take 15 minutes, ask you pinpoint questions, and then we'll make a determination on what entity would be best for you, approach you to our attorneys, and help you with that. You can make sure you follow us on Instagram, ASAP. We are going to start a series about Trump versus Biden tax plan. Remember, we are in the last stretch of this historical election. Remember, I already voted. Have you voted already? Go ahead, vote, please vote. It's a historical election, okay? And I am going to sort of dissect Biden's plan for taxes versus whatever Donald Trump has already proposed and any possible adjustments to the tax change that he did in 2018. Okay, so to start following us on Instagram, Jesus, take the video and take the wheel and play the video. Sorry. First, open Instagram and type in Invictus Advisors. Select the Invictus Advisors USA to get to our Instagram page. Click the follow, see all the content we post. So it's been a very, very, very informative lunch with the shark today. I think I gave you a lot of information. I think we are on information overflow, and we're like, what the hell, Halloween, right? So let's end up today's lunch with the shark with a quote from Peter Bestarbaca. He's a creator of the phone game Angry Birds. And he said, you have to have more leadership, less management. It's about getting stuff done. You can sit around and analyze things forever. But while you do that, the competition has moved on. Plain and simple. Either you shit or get off the pot. That's it. I cannot say it in other words. Layman's terms, either you shit or get off the pot. Stop overthinking, because you're going to find a problem for every problem. It's been great seeing you today. Have an amazing week. Have an amazing afternoon. See you tomorrow. Bon appetit. Ciao.
Thank you for listening to Lunch with the Shark. If you would like to set up a consultation with the Shark CFO, Vidal Espinosa, visit his website www.invictus-advisors.com, and don't forget to subscribe on Facebook, Instagram, YouTube, Twitter, and LinkedIn.